Welcome, everyone. Thank you for joining Hugh and I for a market brief here at the end of 2012. It has been some time since we've put one of these together. Hugh, you need to stop taking so much vacation.
Right. Uh, Taylor, if let me wait a minute. 5 days vacation in a half a year?
Yes, that's too much. Anyway, let's get down right to business. Um, what we wanted to do is present sort of an overview of 2012 and maybe take a look ahead to 2013. We figured we would start with prices for the major commodities. So the first slide up here, we've got Brent crude oil. And you can see we hit a high for Brent March 1st, 2012 of 128.40. Kind of came into the year, Hugh. We were talking earlier, first trading day of 2012. Heating oil went up 10 plus cents. Brent here went up a few dollars. Kind of rallied right through the spring. Brent hit a high of 128 March 1st. Subsequent sell-off, low of 88 mid-year. And we are going to end roughly $3 higher than where we started, somewhere around a $110 Brent versus a starting point of roughly 108. If we move on to the products, gasoline, similar story. High hit in March, 344.55. Subsequent sell-off to 254, middle of the year, and we're going to end somewhere around the 280s versus a starting point of 266, 267. So only about a 15-cent positive year-on-year change, but a range for the year of nearly a dollar, roughly 90 cents. So quite a volatile year in gasoline, but a year-on-year change not too different. And finally, the one that probably gets the most press at Sprague, the distillate or heating oil contract. This year traded in our 80-cent range, a high of 332, a low of 251, and we're going to end the year somewhere around 304, 305 versus a starting point of 292.67. So a increase of 12 or 13 cents. So kind of an interesting year, up, then down, then back up again to end roughly where we started. And wanted to sort of shift gears here and talk with folks about what's being forecast for the upcoming year. And you can see from this chart and this table that Hugh provided here, we've got the major investment banks all predicting Brent crude prices in 2013 ranging between a low of, let's say, 104 and a high of roughly 120. So not going out on a huge limb. I don't necessarily think they ever do, but forecasting Brent crude pricing somewhere where it's going to end this year. So now's the time. I think you and I wanted to do just a little bit of casual back and forth. And given what we just saw, Hugh, in terms of price action, I'm curious to know what some of your reflections on 2012 are and what you see moving ahead to 2013.
Okay. To my mind, the thing that always impresses me is, in fact, how oil prices are a function of the relative strength of the U.S. dollar. We get so carried away with, European debt crisis issues, U.S. debt crisis issues, the Chinese economy or Iranian sanctions or whatever, that we tend to, at least I tend to overlook how important the dollar is as a function of that pricing. And if looking at that chart you've got up there, Taylor, which as always is the excellent Taylor Hudson Excellency, the first half of that year, almost conveniently down to June 22nd, was marked by a gradual a rise in the value of the US dollar from probably in the order of starting a maybe 120, excuse me, $1.20 or so to the euro to close to $1.40. In fact, just over $1.40. If you correlate that to the price of Brent crude there, or for that matter, heating oil or anything else, I think you would find that the relationship is remarkably close. However, just in that first half of the year, the specific or the more specific reasons were the worsening of the European debt crisis, Greece and all that, or gradual recognition that the U.S. economy was slowing, that the first quarter results, which you may recall were fairly encouraging, was in fact subsequently substantially revised. Then Saudi Arabia weighed in with the $100 fair price, which I think was really very significant. And the Iranian sanctions, which were responsible for that very early spike at the beginning of the year, began to cool off as either people expected the Strait of Hormuz not to be closed or something along those lines.
Yeah, to that point, I wanted that was the one thing that I wanted to talk about for 2012, was just to make a point about what didn't happen in 2012. And you think back of how many market updates and how many market watches you wrote that were all about Iran and whether the Straits of Hormuz were going to be closed and whether Israel was going to have an attack to prevent the Iranians from doing this or that. And, for all of the headlines and for all those in the trading community that, whisper behind the scenes, something is going to happen soon, we're just sure of it, for absolutely nothing to happen is pretty remarkable. Obviously, we hope nothing happens again, but I guess it's just a little reminder that sometimes these stories that capture a market's attention for so long turn out to really be non-events in the grand scheme of things. So I'm glad you brought up Iran, because when I looked back at my notes as entering 2013, especially the first quarter there, that's exactly what the headlines were. Who was going to, attack who first, and what the implications were going to be. So that was definitely a good one.
Yeah, we've got one crusty old. Well, I can't call anybody old. Me personally, but a good old customer down East Maine who said. Effectively geopolitics, schmeopolitics, those people are so dependent on oil revenues, particularly Iran, very, very smart. They'll never do anything to really jeopardize, their food supply.
So my question for you about Iran is, if we're sitting here at $110 Brent crude, and the Iranian sanction program is right now in full steam ahead, even though I guess we can argue about whether any's getting out or not. Would you say that if tensions eased over the coming year, what might happen to prices then? In other words, do you think the effect of the sanctions would have been much worse this year, if not for what?
Absolutely. If not for the fact that we're missing about recently, something like 1.5 million barrels a day, maybe, of a total Iranian production, not necessarily exports, of about 3 million. I think that exports were running like 2.5, and they're now, I would think, down to maybe something like just over 1.3 million, something like that. Two things occur to me, Taylor. One is that this overall is a reflection of another major factor that's been restraining prices and is likely to restrain them going forward, and that is the obvious dramatic increase in global, especially U.S. Production from, all kinds of places, Brazil, Canada, you name it, and it's remarkable. The second thing is, however, that regardless of whether, and what will bear on the fact that if the Iranians suddenly get religion, not theirs, maybe ours or somebody's, they will, that concern, which is still very real, the geopolitical concerns over a major supply disruption still govern a substantial part of the way the investor traders look at the oil market. And I think, as you point out, if it goes away, or you raise, if it goes away, we have a major reason for a substantial correction in crude oil prices.
Let's talk real quick about a point you just made about increasing U.S. oil production. That was quite the story this year, was it not? It sounds to me like everybody is getting into the railroad business.
Yes, absolutely. Who would have thought? I mean, really, it's remarkable to think back of 10, 5, certainly, maybe 10, 15 years for sure, that a major U.S. logistic of crude oil supply would be rail cars from the middle of the continent to the U.S. East Coast. Absolutely astounding. Far less the fact that a tanker, as happened when you were doing your great job of replacing me with the Market Watch the last few days. An oil tanker runs aground in the Hudson River, moving crude oil from Albany to St. John to Canada for Irving.
And everything you've read, suggests that trend is not going to change in 2013, is it? I mean, there's certainly people who are wanting to reverse flows on pipelines, permit new pipelines, but for the foreseeable future, we're going to be talking about rail cars and trying to get crude out of the mid-continent.
Absolutely. I mean, it's a huge development, of course, and it's fantastic. It's great for all of us and for our kids and for whoever else. But this remarkable technological revolution in fracking and other non-conventional crude oil production is very significant. I think, Taylor, we'll see rail cars and then maybe eventually pipelines. And down the road, 4, 5, 6, 10, 15 years down the road, I mean, it augurs huge. It's very, very significant in terms of U.S. Energy independence and our whole economy and everything else that's been so stymied by failure or not a failure, I should say a failure to constrain our energy appetite in the view of the fact that we haven't had those resources. So I think it's very important.
I guess the final thing I would talk about for 2012 would be of things that didn't happen. Was it, there was a lot of ink spilled over Europe, like you mentioned before, and whether people were going to meet certain deadlines, a lot like the fiscal cliff that we're dealing with today, whether Greece was going to be kicked out or Spain or whoever of the Eurozone. And, it seems to me that central banks around the world have made it very clear that they are not going to stand idly by and watch as economies have major problems. They're going to print as much money as they possibly can to appease the markets. So unfortunately, it seems to me that we're headed towards sort of a lost decade, if you will, that Japan went through. And much like zombie banks, we have sort of zombie economies here, where demand is very, very, very low and very much at risk going ahead. But that to say, again, a lot of headlines. The bullish headlines were we're going to go to war with Iran. That didn't necessarily happen. The bearish headlines were we're going to fall off a cliff, to borrow a phrase, in the Eurozone. That didn't necessarily happen either. So it just sort of seems like the two biggest stories of 2012, we sort of wound up somewhere in the middle.
Yeah, I think you got it. And the biggest stories of 2013, I have very little doubt, will be what doesn't happen. But before it doesn't happen, seems to preoccupy everybody, especially the media.
So what do you think for 2013, Hugh? Well, actually, before you do that, let me go just more. I'll talk. I'll preempt you a little bit here. In 2013, the one thing that I wanted to point out was I think one of the biggest stories will be starting with the May heating oil contract on the NYMEX. The delivery grade and quality will be equal to the Colonial Pipeline's grade 61, which essentially is ultra-low sulfur diesel. So this means our heating oil contract that's been around for many years is now going to essentially be an ultra-low sulfur diesel contract. And what I don't think people have really thought through yet, or what we'll be talking a lot about in the spring and in the summer, is the historical basis relationships that have existed between a rack location for any distillate product and the NYMEX will now be, I don't want to say tossed out, but potentially revised. And generally speaking, if you replace a futures contract with a cash market product that's higher in value, which ultra-low sulfur diesel traditionally has been relative to high sulfur, basis differentials have tended to go down. So as we look forward, the forward differential discussion will be very interesting this spring as retailers look to put programs together. And the spread between these two products, which this chart points out, and we've been following for quite some time, shows a huge range between 20+ cents premium for ultra-low sulfur diesel all the way down to, as of recently, a small 2-cent premium will be watched very closely, and people are going to have to accommodate for. So 2013, I have no idea what's going to happen with the macro market, but I think this story about the HO contract changing is going to be a big one. Going to be interesting to watch.
Very, very significant, Taylor, in terms of most of our business, Sprague customers. It is going to take some getting used to going on down the road. Regarding macro 2013, I have no better idea, or maybe even worse than you. I would just do one thing. Quote Societe Generale's November 21st statement when they revised their 2013 projection for Brent from 103 to 110, a fairly substantial increase. Quote, oil fundamentals, risk appetite, and geopolitical risk are all forecast to be neutral. Well, neutral doesn't, of course, say very much, except that they really are all in the mix and might go a long way to explaining why that average forecast, I think, comes in just about where we are now.
All right, well, with that, I think we'll wrap it up and wish everyone a happy new year, and we look forward to doing more of these in 2013. And your questions and comments, as always, are appreciated. Everyone have a fantastic holiday. Bye-bye.